$1.3 million. That's what Bitcoin could be worth in 10 years from now, according to Matt Hougan, CIO of Bitwise. This isn't just a wild guess, it's the result of a detailed Bitwise report prepared for institutional clients.
The number of investors who own crypto is rising very rapidly. Bitcoin will take 25% of the store of value market, which includes Bitcoin and gold, by 2035. From my perspective, that's actually a very conservative forecast.
In this video, we dive into Hougan's thesis and challenge his main assumptions. We also discuss his bullish outlook for Solana heading into the end of the year. Disclaimer, nothing in this video is financial advice. The Cointelegraph team holds positions in Bitcoin and Solana. First of all, Matt, it's a pleasure to see you.
Thanks for having me. Yeah, I'm excited to be here.
I just want to discuss a recent Bitwise report that you published in August. You said in the report that you predict Bitcoin to reach $1.3 million by 2035 with a compound annual growth rate of 28.3%. Can you summarize how we get there?
Yeah, absolutely. Thanks for the question. It might be worth starting with why I wrote the report. In traditional finance, one of the biggest things banks do is they publish long-term capital market assumptions that predict the long-term returns, correlations, and volatility of stocks, bonds, real estate, commodities, and other assets. And these are the predictions that institutional portfolio managers use to decide how to build their portfolios, how much stocks to own, how much bonds to own, how much real estate to own, and how to mix them all together. I've been at Bitwise since 2017, and I never had an institutional investor ask me for long-term capital markets assumptions about Bitcoin until 2025. And we had over 12 requests from some of the largest platforms on Wall Street, people who control trillions of dollars of assets. And the reason is they're now considering Bitcoin alongside stocks and bonds and real estate and other asset classes as a fundamental building block. So that's a really important thing. So how did we tackle that problem? Well, you want to do a data-driven approach, and you want to do a data-driven approach that understands what's going on in the broader market. So what's going on in the broader market right now? For Bitcoin, we have three big factors. One, we have soaring debt and deficits in the US and in other countries around the world. So we have rising concerns about the risks of fiat debasement. At the same time, we have regulation that has gone from aggressively anti-crypto to aggressively pro-crypto. And we have institutional investors who now have tools like ETFs that allow them to access this asset class. When you put it all together, you think there's going to be a lot of institutional flows into Bitcoin, but how much? The way we got to that $1.3 million price target is we looked at the markets that Bitcoin is going after. We think it's going after the store of value market that's dominated by gold. We think it can be used for offshore wealth, which is often tied to real estate or Forex reserves right now. We think it can be used in certain emerging market economies. And we estimated how much of those markets will it have by 2035 and how big will those markets be. The $1.3 million prediction guesses that Bitcoin will take 25% of the store of value market, which includes Bitcoin and gold, by 2035. From my perspective, that's actually a very conservative forecast. I probably think we could be bigger than gold by that point, but for the purposes of an institutional paper, you want to take a reasonable assumption, and saying we'll be about 25% of the broader gold market, I think was reasonable, and that just works out to 1.3 million. I think we'll get there and beyond.
I just want to ask a couple of follow-up questions regarding those theses. So you expect Bitcoin to reach the same market capitalization of gold by 2035, or at least you think there is a good chance that will happen because Bitcoin is gaining traction with its narrative of being digital gold. On the other hand, we know that gold has been around for thousands of years. Wouldn't you say that just a decade of time is enough for a relatively new asset like Bitcoin to build the same amount of trust that for gold it took hundreds of years?
Yeah, I think that's a very fair question. I mean, one important thing I'd point out is we're actually predicting it only gets to be 25% of the market. So we're predicting it gets to be as big as gold is today, but we think gold is going to continue to get bigger and bigger and bigger. So we're not saying it matches gold by 2035. It matches gold's value today, which is about $25 trillion. But the broader market, but it's still a good question. Can Bitcoin catch up that much with gold in the future? The things to remember, gold has definitely been around longer, but we've only been off the gold standard for the last 50 or so years. So I think people may overstate the history of gold. The other thing I would say is that if you look at the history of money, the things that made gold the best money is that it's very dense. You can store a lot of wealth in a very small format. And as a result, it's relatively easy to move. But Bitcoin, you can store an infinite amount in no format, and you can move it around the world at the speed of light. It's just better than gold at most of the things that gold does. It's more scarce, it's more divisible, it's easier to store, it's easier to move, it's harder to forge. The only thing gold has going for it is that it's older than Bitcoin. It's been around longer. But again, I think people overstate how long it's been around. It's really only been free floating for 50 years. And you just see how Bitcoin has caught up over the last 15 years. If you continue that trend, again, I think we may be being conservative.
In the US, we had a change in the political regime with Donald Trump. The environment for crypto got so much better, but we also know that the US is a deeply polarized political environment. And so, what happens if in the next elections we're going to have a result which brings us to the previous situations? Do you see it as a possibility?
Yeah, this is a great question. It's one I think about a lot. The short answer is I see it as extremely unlikely. The thing to remember about what's happening in crypto right now is that it is rapidly gaining widespread acceptance across all parts of, in this case, the US society. So the number of investors who own crypto is rising very rapidly. Wall Street firms, who were traditionally the primary financial supporters or one of the big financial supporters of the Democratic Party, are now directly engaged in crypto. BlackRock has their most profitable ETF is a Bitcoin ETF. JP Morgan had hundreds of people working in blockchain. Citigroup is investing it. What I'm saying is that the times have changed and Bitcoin and crypto has sort of gone through, and I don't think they can be pulled back in. A thing I would note, just to put some data on this sentiment, is that the Genius Act, which was the first piece of crypto legislation in the US, which passed both houses of Congress and was signed into law earlier this year, it governs stablecoins, received 300 votes in the US House out of 435, including 100 Democratic votes. So it actually had wide bipartisan support. I think it's extremely unlikely unless we see Elizabeth Warren win the presidency, which, I guess could happen, but seems unlikely. In 95% plus of the scenarios I can imagine, crypto has just made it now into the mainstream and it's not going back. That's at least what I think is going to happen.
So in the report, you highlighted that since their launch in 2024, Bitcoin ETPs have attracted about, if I'm not mistaken, $170 billion. The question is whether we can expect similar inflows continuing in a sustainable fashion in the coming months and years. What evidence is there that institutional adoption will continue at the same pace rather than stalling after an initial burst?
Yeah, it's a really great question. The evidence is I come from an ETF background. So before I joined Bitwise, I was the CEO of ETF.com, created the first ETF analytics system in the world. So this is a space I know well. If you look at all ETF history, it's extraordinarily rare for ETF inflows to slow down in their first few years. Usually, what you see is that flows build. Year two is bigger than year one, year three is bigger than year two, year four is bigger than year three, and so on. If we look at the gold ETF as an example, which launched in 2004, It was the second most successful ETF launch of all time at that time. It gathered $3 billion in its first year. Everyone was excited, but it gathered $5 billion in its second year, and then $8 billion, and then $10 billion, and then $12 billion. The reason those flows go up is that when an ETF is approved in the US, it's not actually automatically available to all investors. Major wirehouses that control trillions of dollars of wealth, like Morgan Stanley and Wells Fargo, have to turn on approval as well. And that process can take a long time. At Bitwise, we just had a $1 trillion+ wirehouse, which I can't name, uh, approve our Bitcoin ETF for distribution this week. So, because you get these approvals, flows tend to build over time. It's possible that the Bitcoin ETF is like the first major ETF for which that is not true. And all of the last 30 plus years of ETF history isn't going to repeat. But the base case should be that if this follows the norm or pattern, flows are actually going to accelerate. And I think when you take that and you combine that with the fact that people are getting more comfortable with Bitcoin, that the regulatory environment is good, and that there's rising concern about dollar debasement and fiat debasement, I think we're going to be surprised to the upside. So I expect flows to continue to accelerate and for this year to be better than last and next year to be better than this one.
You said that you expect the 4-year cycle, which we are used to see in Bitcoin, at least in the past years, to lose relevance. But my question is whether these institutions that we are talking about are going to hold strategically Bitcoin for the long term, or maybe they are just buying it tactically, and then we're gonna see cycles where they gonna sell, and then the market is gonna crash a lot, and then they're gonna buy it again, and so we're gonna see a repetition of those cycles, just in a slightly different format.
Yeah, wow, that's a great question. Of course, that's possible on the margins, and there's certainly tactical investors in our Bitcoin ETFs. We know that from the data, and we can see that in the flows. But on average, if you think about institutional investors and professional investors like financial advisors and family offices, and you think about that class compared to the retail investors who traditionally drove Bitcoin, retail investors tend to be very momentum driven and tend to chase prices up and then sell when prices go down. So when you look at retail owned stocks or retail owned asset classes, they tend to follow that boom and bust cycle. Institutions, on the other hand, tend to have long term strategic allocations. I'm going to add 5% crypto to my portfolio. And then if crypto rallies, that 5% becomes 7%, and they actually sell it to get back to 5%. If crypto falls, that 5% may become 3%, and they actually buy it back to get back to 5%. So compared to the retail investors who have driven ETFs or crypto historically, the professional investors that are becoming a bigger part in the market are much more likely to rebalance and buy low and sell high, which I think will cause volatility to shrink, and I think will be one of the reasons why I think that 4-year cycle won't repeat. I do think the nature of the average buyer of Bitcoin is changing as ETFs open up the market.
Now I want to get a little bit in the short-term outlook. So I read a post which you wrote about Solana. You were saying that Solana has all the ingredients for an epic end of the year run. And definitely we see that right now Solana is very hot. The price is quite positive. Can you summarize the core of your thesis for Solana for the end of the year?
Yeah, absolutely. Yeah, I wrote that piece when Solana was 210 or something. So it's done okay. When you look at crypto over the last 18 months, the recipe for really strong returns has been very clear. You take ETF inflows, you add corporate treasuries buying, and you get a good news cycle and you get extraordinary returns. If you think about Bitcoin, we had the Bitcoin ETF launch in January 2024. We had an explosion of Bitcoin DATs. We had concerns about fiat debasement, and the price tripled. If you think about Ethereum, We had ETF flows start to turn around in April when people got excited about tokenization. And we had Tom Lee and others launch Ethereum DATs, and the price tripled. If you look at Solana right now, there's widespread expectation that we'll see multiple Solana ETPs launch in the very near term. At the same time, you have a great technical story with the Alpenglow upgrade and rising interest in tokenization. And then you layer on these very large DATs with huge, well-renowned speakers like Dan Moorhead from Pantera or Kyle Samani from Multicoin, some of the most articulate advocates for crypto in the world. You put all that together, and I think the outlook is extraordinarily strong. And the last thing I would say about that is that Solana, remember, is much, much smaller than Bitcoin and much, much smaller than Ethereum. Bitcoin's a $2.5 trillion asset. Solana is a $100 billion asset. It's 1/25th the size. It's 1/5 the size of Ethereum. And what that means is these purchases by the DATs and any inflows from investors are gonna have an amplified effect. I haven't seen as positive a setup for a crypto asset, since I got to Bitwise. It's just an extraordinary setup. I'm very bullish for Solana season.
But there needs to be some sort of underlying narrative to attract institutional capital, as far as I know. And for sure, Bitcoin has the established narrative of this digital gold. Ethereum has the established narrative as the favorite platform for stable coins. What is the pitch for Solana in terms of fundamentals?
Yeah, great question. Solana's the new Wall Street. Solana is the place that traditional firms in a regulated setting are going to tokenize stocks and bonds, etc. It's going to be competing in this market, of course, with other blockchains, including Ethereum, which is really leading a lot of the tokenization. But Solana is architected to be the new Wall Street. And that's a very big market indeed. So if you listen to SEC Chairman Paul Atkins and what he's been saying recently, he is telling you that all financial assets, stocks, bonds, etc., are going to move onto blockchain-based rails. If you listen to Larry Fink, the CEO of BlackRock, he's telling you that all assets, stocks, bonds, mutual funds, ETFs, are going to move onto blockchain-based rails. So for the last hundreds of years, we've been using traditional rails, first paper, and then digital exchange-specific rails at the New York Stock Exchange and NASDAQ and others. We're moving to an era where it's blockchain based. And so your question is, which blockchain? And the two leading contenders are Ethereum and Solana. I use the phrase Solana is the new Wall Street because Solana is explicitly designed to capture that use case. Ethereum is well designed to capture many use cases, and tokenization is one of them. But Solana is architected to sort of serve that use case, and that's what it's trying to be. And I think that was a reasonable shot. Again, there are no guarantees. This is early in the development of these markets, but they're going after extraordinarily large markets, and so I think multiple of them can be attractive at once.
Okay, fair enough. And now, final question. When you talk about spectacular end of the year rally for Solana, do you have any price targets in mind for the end of the year for Solana?
It's a great question. We're working on that. Look, I think it trades to new all-time highs. I think it goes substantially higher. I don't have an official price target right now. We're working on that for our end of year push, um, but I'd remind people we talk a lot about Bitcoin, we talk a lot about ETH, we talk a lot about Solana. We almost talk about them like they're of equal size. But Solana is 1/25th the size of Bitcoin. It's 4 or 5% the size of Bitcoin. And it could double and it'd still be dramatically smaller than ETH. So I think the upside potential is really significant.
No, no price targets for the end of the year for Bitcoin either?
For Bitcoin, we're still, in December 2024, we predicted Bitcoin would trade to 200,000 by the end of the year. I still think we could see that. It's getting late for that to happen, but Look, I think the conditions are ripe for a very strong Q4 in crypto. And we haven't backed off of our $200,000 price target. I know it's a ways away, but I think we're moving directionally in that direction. It's a matter of when and not if.